Hey guys, welcome back to Smart Trader. Hope you guys are doing great. And in this particular video, we will be learning our strategy of options. That is the strategy number 3. So if you have not watched strategy number 2 and strategy number 1 sessions, watch out so that you get an idea. And if you don't know about option basics, then go to our playlist of options and you can watch out all the videos related to options and the basics of it. All right. So what is the strategy number 3? Strategy number 3 is going to be long straddle is what we're going to discuss. We have a lot of strategies, don't worry. We will discuss one by one. Let's not hurry everything in one shot so that you don't even observe it. So we will understand what is the importance of this strategy, how effective it is, and how traders take advantage on this particular strategy, and what is the logic behind this strategy of traders using. Now, this long straddle strategy, very important. The theory is this. Long straddle is an option strategy where the trader purchases both long call and a long put on the same underlying asset with the same expiration date and strike price. That means you are buying the call option and buying the put option. Okay. Same expiration date. That means expiry same date, same strike also, not a different strike. For example, 16,000 Nifty means you will buy a call option of 16,000 CE and 16,000 PE. Both you are buying same expiration. So if you do the same expiry and same strike price, if you do buy, then it will become long straddle. If you sell, it will become short straddle. That we'll discuss later. Different strategies have different advantages. So we're discussing separately. So how does this look? This is theory. So in practical, how does it look? We will discuss. So this is one example of long straddle. Okay, so like I told, we are buying the same strike price. Okay, the spot price of Nifty is now currently 16,682. The market has closed for today. Today was an expiry day. I have taken this for next expiry example. So strike price is 1650 put option and 16,650 call option. Both of this same expiry of 12th May and 12th May. That is the next Thursday. Okay. So one lot example, and you are buying this. B for buying. Okay. So if you buy like this, then the profit is going to be unlimited. Like, you know, in buying, we have profit as unlimited and the loss will be what you have invested. So funds needed to buy one lot is 17,000. If you lose, maximum you will lose 17,000 rupees from your hand. But profit is unlimited. So this is how the graph looks like based on the movement. So now let's say Nifty is 0% currently. Now it forms a, there is something with expiry also. As the expiry date goes, okay, so you see this, you are in a negative position. Okay, so you have a break-even level up to how much? 2%, both the direction almost, right? So Nifty has to cross 17,000. Okay, Nifty has to cross 17,000 or Nifty has to cross below 16,291 by end of expiry if you have to make profit. If not, see, on expiry last day on 12th May, you are in a loss of 16,000. If you're here, it is 12,000. You're above 17,000, let's say you made 2,000 rupees profit. So let's say you are 3% away. So you're in 15,000 profit. Same way if you go this side, if the market goes downside also, 11,000 profit. So in this case, you don't know whether the market is going to go upside, Nifty is going to go upside, or Nifty is going to go down. You don't even know the direction. So you're not a directional trader here. You are a non-directional trader. So when you are a non-directional trader, when you don't know that Nifty is going to go which direction, and when you know that Nifty is going to move, okay, it's not going to stay. So when Nifty is going to be volatile and it is a lot of volumes are going to come, either it is going to fall, in a huge volume is going to come and fall, or huge volume is going to come and go up. So let's say before the expiry you have an advantage. Even if the stock moves, let's say 0.7% on the same day, you make 1,153. But as the day goes, decay happens because we have done buying, so it decays. So here, as the day goes, the same position you incur losses. Okay, Saturday, Sunday, now Monday 4,000. On Tuesday the same level is 6,000. So Nifty, if Nifty is moving away, you make profit. If Nifty is staying in the same level, by end of the day, like I told you, you should be out of your break even, this number. So this, you are betting that Nifty will either go above this or below this. If it stays within that, you will lose how much? Around maximum 17,000, this peak. Okay, all right. So on this is an example on, for example, on tomorrow when you're trading, let's say on Friday you're trading, your graph looks like this. So depending on that, you will make profit. Okay, only on the expiry day the graph goes fully down and you need to break the break evens. But before expiry, the break evens will be very quicker. Okay, so you see the break evens are quicker. See on Thursday, it is showing 500. So let's say on Friday, once it crosses 0.8% only, I will start making profit. Okay, as the expiry date goes, because of the decay, it goes down. And as per your prediction, this has to come out of this. If not, you will lose all your 17,000 rupees. So what is the probability? The probability is comparatively less. 45% chances of winning, 55% chances of losing in this particular trade. Now funds required here is very less compared to selling. So a lot of traders will take these type of position, but the probability is less as you see here. Okay, so what is the strategy? Simple, same strike price you're buying. Okay, if market goes upside or market goes downside, you are making profit. But there is a catch, like I told you, it should have this break even by expiry. As the day goes on till May 12th, you have to ensure the stock moves away from this. If it stays within this, then you're incurring whatever loss. So it's showing expiry day. If it is here, you are losing 2,918 rupees. All right. So out of your 17,000, this is the maximum you're gonna lose. But exactly this is the peak. Maximum if you want to lose on expiry, if you stay exactly neutral. Imagine Nifty didn't move at all for 7 days and it is staying in the same level, then you will lose your whole 17,000 rupees. All right. So that is the beauty of this particular strategy, whichever side the market goes. So normally in stocks, we cannot take such advantage, right? In equity. But in options, these are the advantages. Even though you don't have proper direction, and if you feel market is going to move some direction, and then you can take advantage. What I have taken today is an example of short straddle, not a long straddle, because in Zerodha I was doing selling, so I had taken the same strike price. If you see here, today is expiry, and 5th is done, May of 5th today, and we got some advantage, and little adjustments were made because market went one direction and then changed the direction, right? So little adjustments were made to protect my profit, and we ended up closing the trade for an expiry day. But this is basically a short straddle, but I have taken a hedge positions also, so that strategy name will change basically. Once you learn all that, you will get an idea of what I'm saying and all that. So that is more about this long straddle. And today in angel broking, there was a lot of issues. The app was not loading. It was not taking buy orders. It was not executing orders, and not even loading the market depth. So a lot of issues were there in angel broking. So a lot of people were complaining also in Twitter and all that. When I just checked, not just few people, a lot of them had an issue today, being an expiry day. So I have decided I will do option buying also in Zerodha, but not the same account, because if I do same account, both is gonna mix, because I'll be having hedge positions here. I don't want to get confused with my positions. So what I will do, I will either trade in Upstox, which is faster compared to angel broking, or I will do in Zerodha itself, because I'm used to trading in Zerodha from beginning. So I may open an account in my wife's name in this weekend, so that I can do options buying in that more easily, and it's faster. Zerodha is faster. A millisecond base also is very faster. So we will continue to do selling here itself in my account, and buying in my wife's account, so that we can take advantage of the technology. All right. That is one more update which I wanted to tell, because option buying every second counts. If after 10 seconds, if the app, you have seen in my videos, after 10 seconds, if it opens, then you're losing out the buying opportunity itself. And if you're not able to exit your trade, it is worst thing which can happen. That is the reason I'm gonna shift. Okay, so that was more about this strategy. I'm keeping it very simple. I showed you what is the theory, and this is the practical thing. This is how it looks. The challenge, if you ask me, the challenge is most of the time within 5 to 7 days, Nifty, yes, if Nifty is directional, if it goes one direction, we make money. But problem, what happens is Nifty goes up and then comes back. After 1 or 2 days, it comes back to the same level. That's when we incur loss. That's the reason even probability is saying we will lose, right? 45% chances of winning only. 55% we will lose. So that comes into picture. If you have a proper system, you can take advantage. But generally, if you, as a beginner, if you just go on approach, the chances of winning is less, according to my experience as of today. So that was more about long straddle. In the coming videos, we will discuss about the short straddle and other strategies also. So keep learning, and if you're not seen the previous videos, watch out the options learning videos so that you get an idea about what these basics are. So see you soon with one more learning video. Till then, take care. Bye bye.